Friday, April 5th, market analysis. Stan Ehrlich, good morning, 10:02 California time. And we start out with the indexes, S&P, Qs, E-mini, of course, NASDAQ futures, of course, and the DIA, and sometimes the Russell as well, sometimes the DIA. So, yesterday, soon as I stopped my recording, what I talked about during my recording about the market being up in thin air in a very precarious position, it crashed. Wow, that was a good one. So what now? Well, we had a very big bearish engulfing candlestick, which normally is a bearish indication. We weren't overbought within the allotted previous number of days that my system requires, so I'm not getting any big red bars or sell signals, but everything is there except for the overbought condition, and we were close. So I like very much what I saw yesterday in terms of being bearish. Now, this rally today is not totally unexpected because remember, you oftentimes come back into approximately the middle of a big reversal like that, and here it is. We've done it today, plus a little bit more, which doesn't do any damage. The key here is to not rally above yesterday's high or the signal is totally bad. And yesterday was not really a signal, but so close. So I'm kind of treating it like one. And I'm bearish. And I'm looking for a move down of some significance for a month or maybe two. Okay, the S&P 500 spider. I've got two different Fibonacci retracement levels drawn on the chart. One's off the October 13th low of 2022 to the top of the market before the biggest downside correction we've had throughout this whole bull market since October 22. And that gives me a Fibonacci retracement level of approximately 418. And sure enough, about 1, 2, 3, 4 months later, we are down to close to the 50% level and below the 382% Fibonacci retracements in the zone, so to speak. And it turned around. Guess what? Again in October. And way before October of this year, I'm going to start talking about October again. Let's hope it works as well as the last 2 years, which have been phenomenal. Enough of the October. So from last year's October low till the high we made just about a week or so ago for the spider, the downside correction, the same 382, 50% ballpark area is what I'm looking for. And that would be down to approximately 480, 477, or somewhat lower. And I've been talking about 466 also. That's what I'm looking for as far as a downside objective in the next 1 to 2 months for the S&P 500. Now, today, we have rallied back into and a little bit higher in the middle of the range of yesterday's big bearish engulfing. And again, not surprised, but now I do not want much more of any more rally. And I'm hoping that it'll go right back down again. It would be great if, like yesterday, 10 points, but I doubt that. That was a surprise, a big, great surprise yesterday, but a surprise. Nevertheless, excellent. So from here on, around these price levels, I'm expecting it to start pulling back down again. Next chart. We're looking at the rally high here on the 5-minute S&P 500 chart. And I finished my YouTube conversation approximately right here yesterday, literally just at the tiny bit beginning of that 10-point kaboom, a whopper. That's a big down day in any kind of market situation. Even if you go back to COVID, that's a fairly big down day. So we've come back up. Now I think it's about time to go back down again. Next is the E-mini. Basically the same story here, but you know the high and lows for the E-mini are different than the high and lows for the spider because the spider is only open for 6.5 hours a day from 6:30 until 1 o'clock California time, where the E-mini is open 23 hours a day and therefore can make and does make very frequently higher highs and or lower lows than the spider. Nevertheless, of the same index, the E-mini is just affected by world events, et cetera, when the spider is closed. Okay, no reversal, basically a slightly lower low overnight, just barely yesterday afternoon. Doesn't really count much. And we're coming back up to a little higher in the middle of yesterday's range, but that's not a bearish engulfing on this E-mini. Yes, it is. I'm sorry. Not quite identical to the S&P, but still just as profoundly bearish, supposedly. Let's see what happens here. Now, again, the Qs. Big bearish engulfing, rally to the middle, a little higher than yesterday's range. And let's see, and there it's still there. So it really hasn't started to roll over yet. But that's exactly what I'm expecting very, very soon. And here is the 5 minute, on the Qs. So they're stalling out for a little while. Well, what is that? A half an hour, something like that. And we'll see what happens next, since we're real close to the highs of the day and highs to the little range here for the last hour. So looking for it to turn down, even a little bit more rally, as long as it doesn't close or get above either one. I don't like that. Yesterday's highs, so I don't want that. Next is the NASDAQ futures contract. Looks very, very much like the spider, and same commentary. Next, the 1 minute for the NASDAQ, and we just had a sharp little rally, and now we're dribbling back down somewhat. But again, no change here, not a surprise. Might be an area that you would think about potentially going short. Interesting, huh? We'll see what happens. Next, Russell 2000, minor new low again. And by the way, guys, that low yesterday and the other indexes I've talked about was a new low for about 2 to 3 weeks. Quite a significant amount of time, not to be taken all that lightly. And we're going to go to the Russell 1 minute chart. And as you can see, for about a week or so, it's been bobbling down somewhat, and new lows yesterday and this morning for the last couple of weeks. Next, bond futures. At the moment, we're around the middle of the range, a little bit lower than yesterday's close, but the market broke below support and made new lows for a couple of months. Now, the rally, basically yesterday, and you could say starting on Wednesday, didn't carry very far so far, and it's in an area of resistance, and I think it's going to make new lows real soon here. This is the 10-year notes, June futures contract, same commentary. I'm looking for it to turn down. It's in a little bit of resistance that did not hold on Tuesday. It broke below it and made another new low on Wednesday, popped back a little bit yesterday, and starting to sink again today. I'm looking for new lows. I'm looking for a move down in the notes and the bonds of maybe another point or so, but slowly zigzagging its way down, kind of like it's been doing it all along here since, what have we got? The top of the market back in December 27th, the end of the last year, beginning basically of this year. Next chart is the notes on a 5 minute basis. Nothing there of any consequence, except it looks kind of bearish to me. Next, crude. Upside exhaustion gap possible. Overbought conditions. Getting closer to my resistance area that I've talked about for a while, 89.60-ish. Maybe you've got another day or two of substantial, fast, quick strength to get even more overbought and bang into the resistance area and turn around and go down. But because it's been overbought for 4 days now, and you've got this upside gap, which is the second upside gap this week, I'm thinking, and I've said it for a day or two here, Crude oil is about to turn down big time. I would not be a buyer. I would be looking for sell signals. That's exactly what I'm doing. So I'm ready to start talking about it going down, but not quite yet. Next, natural gas rallied into resistance, dropped off a little yesterday, dropping off a chunk more today, probably going to make new lows, looking for new lows in the natural gas market in the matter of a week, maybe even less. Next, gold. Wow. Interesting situation. Not only are we super overbought again at extremely high levels, 88, almost 89. The last time we were up here, it was 93 almost at these rally highs, and we did have a modest downside correction. I'm pretty sure I said during that week that the market wasn't coming down as you would expect after a blow off top. It is coming down slowly, which is not particularly normal. Now, we'll see what happens this time. This is an outside trading range day. At the moment, we're about high and last, but this does qualify for one of my bass-backwards reversals. If it stays anywhere, because I'm overbought and you have a higher high and a lower low, I do not care anymore whether it closes higher or lower. You do have a bass-backwards reversal no matter what it does, unless it closes lower than yesterday's close, and then you have my red bearish engulfing sell signal, which would be much like that one. That's a red sell signal official. That's another one there. And way over on the left, we got a couple also. All of them turned out to be real good signals on the average. And the bottoms, of course, are the green ones. So we're cruising for a bruising here, in my opinion. I would not be surprised to see today be the high day on a Friday, especially if it was able to flip-flop back down to lower on the day, which doesn't look likely because of the strength. What about silver? Wow, the same thing with silver. In fact, you even have the upside gap yesterday for a possible exhaustion gap, but that gap is closed. And remember, these things can happen super fast, like you just saw yesterday in the E-mini. It took it only a couple of hours, and I was shocked it was such a huge down day that fast. Things happen unexpectedly, and that is why money management, trailing stops, whatever you want to use to protect yourself when your back is turned to the market, you have to have those kinds of stops in. So, and stops can be used to enter a brand new long or short position. They do not have to be only used to get out of a trade, profit or loss wise, doesn't matter. All right, we have a bullish engulfing, maybe a bass-backwards reversal. We'll find out soon enough. Looking for silver to go down. Next, platinum. Down today a little bit, gapped up yesterday. Resistance in general, not too much to say here, although I expect it's going to start to slip a bit. Wheat. Just a moment. Yeah, that's out of order, but I will talk about the wheat market. So punching against the bear trend line here, and probably very close to overbought, and very much just starting to get into that resistance area. I'm thinking this is going to turn down. Although we broke above the resistance line, the bearish trend line, we're not at the moment above it. We're sitting on it. All it has to do is dribble back down some or a lot more, and I'm going to get a lot more bearish a lot more quickly. Right now, I'm very, very tempted, but I don't have any signals. It is a new high for a week or 3 or 4, and it's trying to break that line. So if it can go up a little bit more, well, then we would have a little bit more rally in front of us. Maybe not so little, maybe as much as 50 cents. But I got to wait and see what happens with this bearish trend line, which is being challenged as we speak. This is back on track with the metals, high-grade copper. I'm liking what I'm seeing here. We've got a lower low, but not quite a higher high. Now, if copper can rally above yesterday's high, again, we will have an outside up day and an overbought condition, or what I have nicknamed Bass-Ackers reversal. So, and there's still a gap to close below the market, no less. Otherwise, this bullish pay, and that's a correction. I'm not getting long-term bearish. I'm just expecting it to pull back some. The bigger picture is this large head and shoulder I started talking about just a few days ago, very late, by the way. I apologize that I was so late with this. I should have seen it probably back in the middle of February. But anyway, I didn't. Now it's working great. The minimum upside objective should be 4.3738, something like that. And we could have a little bit of a dip on the way up like normal. And that's exactly what I think we're about to see, is a little bit of a dip and then up some more. Back to grains, we got beans, oil, meal, corn, and I just did wheat a moment ago. Beans. Grain is overall bearish in my opinion. I cannot justify any long-term bullish opinion in grains at this point. Yeah, I know they're low. Yeah, I know they might be bottoming out for various other reasons. One major one is they're so cheap, but we'll see. So support levels did not hold back in late February. During March, the market rallied back up to resistance, topped out in overbought conditions, and has pulled down pretty good, but we're bouncing off a little bit of a support area, and the soybeans here might have a little bit more of a rally. Now, depending upon how that rally evolves, if it happens at all, and I'm not real optimistic about it, then I might start talking about longer-term bullish patterns for a big bull market, last maybe more than a year, but I can't do that quite yet. So I'm still neutral to bearish on grains in general. In this soybean chart, I'm looking for new lows to a modest degree. Soybean oil, up against resistance slightly, not quite there, and sideways for a couple of weeks. Trend a little ambiguous, but basically down, especially if you're only looking at the last 6-9 months. Now, I see it. I don't want to talk about it much because there's such a huge pattern. It's going to take a lot of movement and a lot of time to evolve, but there's a slim chance that the July 22 lows is a shoulder. I'll say it. And in May of 23, the head, and just recently, February this year, a last shoulder low. That's a gigantic head and shoulder bottom. The neckline would be from this point across that high, relatively slowly downward slanted, classic. So yeah, the makings are there of a huge pattern, but it's so big, and the patterns that are that big are pretty rare. So I'm very skeptical. Neutral to bearish on wheat. Next, meal. Major long-term double top, waiting for it to break support, looking for it to hit lower levels and start another major leg down in soybean meal. And if that's true, and I said major leg down, probably all the way down to 220 or 210, and we're at 330. If that all falls into place, it's going to take many months to do it. And how will the other grain markets go up a lot during that decline in meal? Doesn't seem to match very well. So interesting combination here. Corn. We did catch the bottom exactly in corn, like in wheat, and it rallied up to a little resistance, stopped, and is fiddling around here for a day or two. Right now, we're off 2.5 cents. Not much going on. But you're looking at 2.5 years or so of daily data, and obviously the longer-term trend is down. But I don't like this faster and faster, collapsing quicker and quicker type of activity. And at the very bottom, I got a bullish engulfing ER buy signal to the exact day. That kind of situation can lead to the beginning of a long-term bull, but I need to have a close above our little resistance level here of 448.5. Let's call it 450 in order to get a little bit more enthusiastic about something longer-term bullish for at least a few months or more. So let's see what happens here. And I do see some lows here that might be interestingly correlating with these lows for a bottom formation, but let's leave it at that. Next chart, cattle, big collapse, support didn't hold, continuing to move lower, continuing to stay oversold down to about 20 on the RSI. And I have to tell you, I would think it could come down to 161 again. We were there just at the beginning of December. The big rally that we had couldn't make a new high for the whole trend for a year or two. That's not good on an intermediate longer term picture. Here we are halfway or more down toward those lower lows, or the lows we made in December. So I don't see anything wrong with looking for 160, 162, something like that. Next, hogs. Gapped up today and is in a resistance area. So I think it's about to top out. You've got a gap to come down and close. It looks like the right kind of place for an exhaustion gap and a resistance area. I think it's turning down very, very soon. And here we go with TradeStation again, because I don't know how long it's going to take the ICE exchange to start, changing its ways. But now, RBOB unleaded gas, overbought again. This is not deflationary. All of these overbought markets mean highest prices for a while, and obviously that's inflationary. So it's not encouraging to the Fed to lower rates quite as quickly as they thought they might a month ago. Anyway, should have a downside correction. That down channel worked great, popped out of it on a closing basis, breakout, retracement, new highs today. So there may be another few days of strength, but this is not a good place to be buying into. I like to buy breaks and sell rallies. So that's why my signal is built, and that's how I catch these tops to the exact day, September 15th of 23. Huge move down, only within 2 or 3 weeks. Big. That sell signal didn't work, and on my money management, my trailing stops always are in the market and protect me from taking large losses. So, and my trailing stops allow me to stay with the move as long as the stop is not hit, and they're adjustable. I happen to be looking for a short-term downside correction coming very soon in RBOB, the New York unleaded gas. Next chart, cotton, the rag, looking for the downside objective to be filled soon, 82.92, but now we're oversold. So I should expect to see a bounce very soon, minor short-term, but it could collapse very fast, very quickly, and reach my objective first. This is no place to be looking for new shorts. I would frankly expect a small bounce for a small amount of time. That could be a few days, maybe a week and a fraction, and then get down to or lower than 82.90, my objective. And I've been talking about this pattern ever since, I suppose approximately March 11, March 12. Yeah, before it broke out, more likely than not. Next, breakout of this pennant formation in coffee has caused an overbought condition. And again, I wouldn't be buying it up here. That's for damn sure. Don't get carried away just because it's going straight up, because it'll turn around and bite you real fast and you won't even know it. So looking for sell signals, expecting a retracement back to the top of the pennant. Next chart is cocoa. There's a chance that this rally high today, which is, let's call it 1, 2, 3 days after the highest high, and 1, 2, 3 days before the highest high, you've got another rally high before the high. Now that is a very small possible, very premature for me to say. Head and shoulder top. I'll draw the neckline in for you real quick here. And it is such a small pattern, but sometimes that's all you're going to get. I have to start turning down immediately today or Monday, and right at about these price levels, because they are approximately where the first shoulder, if it's a shoulder to begin with, the first shoulder high was. And that means you got just a little bit more room up to 10,098 or something to match, and it doesn't necessarily match, and usually they don't match the previous shoulders. So it's a ballpark very close to that you're looking for, and we're there. Interesting. This could be picking the last shoulder high. Timing is right. Price is right. The formation looks okay. Just has to start to work. Next, we got OJ. Well, I don't know what to say with OJ. I'm going to wait until something develops. We broke out to the downside of the pennant, didn't work, and then it broke out to the upside, and that failed, and then it came back and tried to make new highs, and that didn't happen, and we're just going sideways. So I'm going to wait a little bit. RSI is extremely neutral. Anything from 40 to 60 is pretty neutral. And next is sugar. Minor new lows, kind of like my comments in OJ. I'm going to have to wait on sugar as well. And lastly, we've got RBOB again. Looks great. You guys have a great day and a great weekend. Profitable trading to you.